All right, for a deeper dive, let's bring in Matt Bryson, Wedbush Securities Senior Vice President, Equity Research Analyst. Good to see you, sir. Your reaction to largely a push from Nvidia?
So I think it was slightly worse than that in the sense that I was expecting revenues for the coming quarter would largely be flat, that most of the gaming downside had been incorporated into their Q2 warning. Having said that, I think investors are far more concerned around what's happening with data center. And I think a lot is going to depend upon the color they provide in terms of they have guided for data center to be up in their fiscal Q3, but to what extent that revenue is expected to rebound or to lift, I think will be the determining factor for what Nvidia looks like tomorrow.
Well, Matt, what is the street looking for in terms of that future growth? Because for the most recent quarter, data center revenue growing 61% year over year. What is the street hoping that piece looks like going forward?
Yeah, so that revenue line for them has been growing double digits, or roughly double digits for the last 4 quarters, up until the most recent quarter. And so at least I've been anticipating that maybe they wouldn't get back to double-digit growth, but you'd see a sequential lift in the high single digits versus the 1% they just did in Q2. So something putting them more on a trajectory, at least longer term, of somewhere between 30 and 50%, depending upon what the macro backdrop happens to be.
And Jensen Huang was saying in a statement that the company is still navigating some of these supply chain issues and also talking about the challenging macro environment. At what point do you expect that to get worked out? And how does that stack up against its competitors?
Yeah, so on the supply chain side, I think we are seeing things get better. So I think in Q2, there were certainly some lingering ramifications from the lockdowns in Shanghai that affected a lot of the companies building servers. I think that affected Nvidia as well, whether it was their inability to put together their DGX products or their customers' inability to build a server that would incorporate their products. So that piece, I think, is getting better. The thing I struggle with is I think AI is going to grow. And I think Nvidia is the leader in AI. But in a more difficult macro environment, could that AI growth, which again, they've been seeing double-digit type sequential growth, Q over Q over Q, could that be at a lower level? It could, but that's the question mark in my mind, and the piece I really can't answer right now.
How significant is the gaming headwind and the impact of the crypto market really struggling in recent months? How is that impacting the story at Nvidia?
So I think it certainly is weighing on the top line. It's weighing on earnings growth in the near term. But when you think about Nvidia and you look at the market projections they've given us, the AI market is so much bigger than gaming. The data center market for them is so much bigger than gaming. And so, yes, it matters. Is that gaming crypto market going to grow off a $2 billion number? Is it going to grow off a $1.7 billion number? I mean, certainly that is a question in my mind. But the more important piece, again, is if that data center business is growing at an accelerated rate because the TAM is so much larger, that I think investors will forgive them a lower base for that gaming business if that data center business takes off again.
Matt, the earnings call is going to get underway in just about 30 minutes from now. What are you hoping to hear from NVIDIA's management?
So again, I really more color around what they see. Well, 2 things. More color around what they see the data center growth rate looking like moving forward. So both in terms of what they expect in Q3, it does up mean up 2%, does it mean up 5%, does it mean up 10%? But even more, any color they can give us around what will that growth look like over a longer period, which is something that they really have been reluctant to provide color around, but haven't had to provide color around because they've just kept on putting up such strong numbers. And then secondly, it's where does that gaming market bottom? So I think certainly that market has declined considerably, but are we looking at a normalized run rate of 1.5 billion? Are we looking at a normalized run rate of 2 billion? Is is the impact of cryptocurrency, Ethereum shifting proof of stake, software gaming market fully baked in, and so if the trough is 1.6 billion, can we start working off those levels using the last decline they had in gaming as a basis for what we should look at going forward?
And we did show earlier your rating for Nvidia as neutral, but then when you look at things like Intel, AMD, Micron, we do see this divergence there. Why is that? And is there anything, do you think, Intel could do to really get itself back into your better graces?
Yeah, so I think the divergence is a couple things. With Micron, it's not that Micron's in a better place. The memory market's awful. It's with Micron, you have book value in the low 40s. So you've really got a stock that I think is trading at close to book or close to, not that, I mean, it's not close, but it's not that far from what has been the trough in the past. And factored in that's the fact that Micron's a better company than it was 4 or 5 years ago. 4 or 5 years ago, they were lagging in technology. Now they're arguably leading in cost per bit and DRAM, leading in the NAND progression. With AMD, it's their share gainer. Right, they are benefiting from Intel stumbles. They are somewhat cheaper than Nvidia here, but I just think they take share in the server market moving forward. And so those are why I'm positive on those two names. With Intel, I think they are doing all the right things. Right, when you fall behind, you have to invest. The new management team is doing that. They've set forward a path that, if they can execute on it, it will return them to market leadership. But that path gets them there in late 24, 2025. And so I think until they can get beyond the current product sets where they're struggling, that it's really hard to invest in Intel, and you continue to see numbers get worse through particularly the Sapphire Rapids server product.
Certainly sounds like a long road ahead. We do thank you, Wedbush Securities' Matt Bryson. Thank you for joining us this afternoon.